Right, we put in a bunch of technical cues for you, and now it's time for some FNO analysis. Chandan Taparia, the derivative and technical expert from Motilal Oswal with us. Good morning, Chandan. So is there a Nifty strategy, or are you straight away going for the banks?
Yeah, first talking about the Nifty, on last trading session, index managed to respect the psychological level of 10,000 and witness a strong recovery of more than 220 points. In the current series, we have maximum put open interest is 10,000 and the 52-week low is also 9952. We have seen positive divergence on the mechanical indicator and the price with open interest activities at 10,000 strike, which indicates that short-term bottom could be processed near to 10,000, but again the upside could be kept and volatility could continue to be in the market. But looking at the current distance in the price setup, it seems that if manages to hold about 10,138, 10,150, this bounce can extend to us 10,333 to 10,450 kind of level. So we are likely to play the positive bounce of further 150, 200 points in next couple of trading sessions. Similarly, in the Bank Nifty also, it is respecting to the previous support zone and holding about 24,500 could take it to us 25,250 to 25,300, 400 kind of level. So positive stance could be continue to be in both the indices, as we have seen a hidden positive divergence with put writing activity after a long time. Now volatility has to cool down. That will give more confirmation for the recent short-term bottom process in the market. And looking at the same stock specific positive on the Reliance, the stock has taken support at the previous swing low of 1020 zone and witnessed a strong spurt in last two trading sessions. We have seen put writing activity with buying interest, and it's a classical example of role reversal because the earlier resistance is now turning as a support, which could provide it to move on higher side. So recommended to go long on Reliance with a stop loss of 1065 and expecting it to rally to us 1140 kind of level. Second trade is buy on Titan. We have seen a consolidation breakout and stock has given a highest daily close in last 28 trading session and also given a consolidation breakout of last 4 weeks. It is seen the buying interest making higher highs, higher lows on the daily scale from last 3-4 trading session, surpasses 50-day exponential moving average and comparatively holding the strength even after the market volatility. So this stock can head to us 860, 865. One can buy with a stop loss of 813 kind of level. One sell trade that is on Yes Bank. We have seen the strong recovery of 220 points in the Nifty and 500 points in the Bank Nifty, but even after that, the stock remained under pressure and no recovery was seen in the counter, which clearly indicates that inherent weakness is there. However, it has recently taken support, but if follow-up selling happens, then stock can slide lower. So better to trade in 170 put, keep a stop loss of 7, and if it slips below 175 kind of level, then put can move to us 19 to 20 rupees.
Okay, Yes Bank has been a weak stock. Chandan, thanks a lot for all those trading ideas. Prakash Diwan is with us in our studios. Prakash, good morning. I wanted your thoughts first on how to approach this whole banking issue. Yesterday ICICI Bank up 11%, Axis up 5%, but some of that came at the cost of HDFC Bank, Kotak, IndusInd. IndusInd has been a weak stock anyway. Yeah. Are you buying into this weakness in the likes of IndusInd and Kotak, or you think this is the time to actually go after the likes of ICICI banks or PSU banks as well?
Sure. So good morning, Anuj. Yeah, I guess yesterday's move was a little bit of a wake-up call for all the people who had written off PSU banks very, very majorly. And I think this should have happened actually last Monday. If you ask me, it was the previous night that we saw the ArcelorMittal resolution come through, the commitment to pay, and nothing happened on last Monday. And suddenly after a week's lag, we saw everybody waking up to the fact that the IBC could throw up so much of possibilities for PSU banks. And if they were to move out of the PCA, given the way the liquidity crunches, it could sort out everybody's problems. So it seemed like the panacea for all ails that we have in the last couple of weeks. And throw in something like a Union Bank numbers to it, and you have a very heady cocktail of positive numbers coming, the right space to be in and stuff like that. But I would give it some time before buying into PSU banks. Maybe a little bit of a consolidation at this move. It's not going to be too soon. The benefits are definitely in the offing, but it's not going to happen in a week's time. Yeah. So just give it some more time before you really start deciding whether you want to build them into the portfolio in a serious way.
There is a pattern of lower slippages, whether you look at ICICI or Union. So is not that reason enough?
No. So that's what I'm saying, Nada. So, let's say today is Bank of Baroda. If something significantly changes there, if something significantly changes for the likes of PNB, then that the smaller ones like the OBCs, Indian banks, or the world will also kind of, be able to back that up. So I agree, there's an NPA switch, turn in the NPA directions. There is definitely, NIM growth that's kind of likely to come back. So as I said, there's a heady cocktail, but
you won't buy yet.
Yes, I would not want to, just be into that rapturous kind of a stage saying, okay,
the big turn is they have the money. NBFCs don't have.
So I said liquidity
the big
also is a big advantage for them. Absolutely.
What about the other part of Anuj's question?
Private banks.
Would you take away from private banks?
No, so I don't think that is, when the environment turns positive, all of them benefit. Of course, it could be led by a PSU bank comeback of sorts, because the setback that they had is now converting into a comeback. But I still like Axis Bank for whatever ills that it has had. And it could probably be, what has happened to ICICI Bank in terms of price volume action could happen in Axis Bank at some stage very rapidly. So, if you really want a little bit of a masala trade, it's more on the Axis Bank side within the private sector banks. But don't write off the likes of Kotak and all HDFC banks so easily, just because the PSUs have taken a little bit of relative head start.
So we'll come back to you in a bit. We're also going to discuss some earnings. Group Finance is on our radar. After their Q2 numbers, the disbursement growth has been quite good, actually 18%. And AUMs have also risen by about 17% year on year. Sudhin Choksi, the MD of Group Finance, joins us on the phone line. Mr. Choksi, good morning. Before asking you about the results itself, I just wanted your thoughts on what's happening with the liquidity crisis. Have you been able to raise money in the CP market lately? And, how much have you managed to sort of garner from the market, from institutional investors? How have you been wading through this crisis?
I think it has been a challenging period for all the players in the financial market. But we have been able to raise money. We have raised CP1 post 21st September and before 30th September as well. Recently, we also raised 10-year non-convertible debentures at annualized cost of 9.5%. And I think a couple of banks also, gave us a fresh sanction and increased our limit also. So I think it has been, the whole process is taking a little longer time, and it is a slow pace. But things are easing, very, very at a slow pace.
So what's the total
yield? I mean, the one that you raised after 21st September. What did you have to pay for this CP? It was 2 months, right?
Yeah, it was a 2 month. I think we would have raised it prior to September was at 8.8 or 8.6 or 8.7. And on the 4th of October, we raised it at around 7.58 or 7.6.
You mean at a lower rate?
Yes, because we had a future contract prior to, the 30th September.
Okay, so what is the total amount, that you've raised through the NCD and also the fresh sanction from banks? How much have you got, say, over the last 1 month or so?
I think the last month or so we would have raised around, the CP was around 2,250 plus, I think in excess of around 3,000 crore we would have raised.
Okay. Mr. Choksi, therefore, all told, can you tell us how much the average cost of money went up for you in September, October compared to what it was pre-September?
I think, overall, if you will see, even as on 30th September, because of the blended cost, where the costs were lower during the earlier 2 months, the overall blended cost has gone up by 15 basis points. But going forward, I think the cost of funds will further go up because, all these money which has a little higher coupon rate, it will pan out for a longer period of its tenure. So I think the cost of, we expect that, by the end of the, next 6 months, the cost will go up by at least 75 to 90 basis points.
You will be able to pass it all?
We have, I think, over a period of last 20 years or so that we have been offering the variable rate loans. I think we have been so far able to pass on the cost. And in fact, we have already increased our PLR, by 55 basis points. We are further increasing, the lending rate on the fresh loans by 75 basis points. So I think we'll have to go by what is the cost, and we'll have to maintain the spread.
Okay, you started the conversation by saying that it's a very challenging time for you in the in the industry. Are you seeing any stress as far as loan growth is concerned on account of the liquidity tightening?
At the moment, we do not see any stress on the loan asset growth. I think it has been pretty steady, if you will see, over the last 2-3 quarters. And I think we should be able to, sustain that kind of growth, even if the, demand weakens because the cost of the home loan goes up, or the demand is not very high on a real estate sector. Then also, I think the loan asset growth should be in the vicinity of around 15%.
Okay, Mr. Choksi. Do you only cater to retail loans, or do you also have a builder portfolio?
See, we have a 96% of the retail loans. We have a developer portfolio is only 4%.
All right, all right. Can you give us some thought, since you know you're so close to the market? Has the situation eased now with so much of OMOs being done? Are people able to roll over CPs or at least pay up old CPs?
See, we have not gone back to the CP market, after September. So I wouldn't know what is the scenario. But whatever I've been, getting the information that I think the other players have been raising CPs, and I think obviously at a slightly higher cost than what it was prior to 21st September. But I think the players are able to raise the money. That's the information I have got.
Okay. Just to clarify, you said loan growth will be in the vicinity of 13%, right?
Yes.
1-3?
No, I said it is currently at 17%.
Okay.
Even if assuming that everything is, doesn't move at a desired pace and it slows down, I think it might drop to 15%.
15%.
Or in the vicinity of 15%.
Okay.
1-5.
Also, what has the asset quality level been this time around? What was the gross NPAs, and how are you seeing, are you seeing any incremental stress?
I think gross NPAs have remained pretty steady. I think, on a June quarter, it was 0.86. Around 137 crores. I think that has gone up by 10 crore, and it is 0.88, 147 crore. At the moment, we are not seeing any much concern on, gross on the quality of assets.
As a set, will HFCs lend lower loans? What was the industry's growth in FY18, and what do you think the industry will do in FY19?
Difficult
not counting the banks. Not counting the banks.
Difficult to answer this question.
Okay. No, I mean, one would assume that there will be a flight to quality, in the sense to those who have or can garner liabilities. So I was actually expecting you to say that your loan growth won't suffer simply because, borrowers from other HFCs will come to you, since you are better able to raise money. That's why I was asking you, what is the industry going to do? Will it remain static? Will it actually see contraction of loans?
See, we have been largely focusing on our customer profile. 50% of our lending comes from the rural location where population is less than 50,000, where generally the circulation of the loan is relatively very, very low. And at urban locations, also we have been focusing primarily on the PMAY. So I don't think we are encouraging very actively, the loans of other players to be financed by us.
Could you give a little more color on this PMAY? How many loans you could sanction? What amount was it?
I think amount-wise, I don't know, but I think, in terms of the number, I think we have had, during the second quarter, I think in excess of 20% or 23% growth over the previous quarter. Okay. So I think the PMAY has moved well, and I think government also has been trying to, give quite a significant thrust on a PMAY. Okay. And I think the major contribution even during the second quarter has come under the PMAY.
Okay, just one final question then. You said the cost of funds would rise by about 75 to 90 basis points. Overall, what are you expecting as far as the net interest margin trajectory is concerned? What could we see over the next 6 to 12 months?
I think we obviously, as I mentioned earlier, we would be passing on the cost, and what we have done is, we have, increased fresh loans. So okay. The new customers obviously will pay a higher pricing compared to the existing customer. And therefore, we'll have to see as to how much we'll be able to pass on to the existing customer to some extent, and that will decide what is going to be our NIM growth.
All right. We'll leave it at that. That's a pleasure speaking with you as always. Thank you very much for joining us, Mr. Choksey. I know Sonal is waiting to tell us the Chennai Petro numbers. Maybe we can finish that and then go for the break. Sonal, Chennai Petro numbers?
Weak set of numbers, Lata. Well, you know, the margin, the gross refining margins, they are really low this time around. A 33% decline sequentially is what we saw at $4.72 per barrel. The margins were also under pressure because of higher operating expenditure. There was a forex loss of around 180 crores. So if I run you through the numbers, though revenues were up around 26% sequentially at 12,000 odd crores, EBITDA declined by around 25%, this leading to an operating profit margin contraction of around 270 basis points, all this due to higher operating costs. The profits, that was also down around 83%, but there was not much spike in the costs, but the taxes were higher and finance costs also went up by around 7%.
Okay, perhaps some pressure on the stock this morning. Thanks, Sonal, for that. Well, moving on, before we take a break, in our coverage of the Finance Minister Arun Jaitley's speech on Saturday, we had erroneously referred to a comment he made about investigative adventurism as political adventurism. We deeply regret that error, and here is the exact quote of what the Finance Minister had said. And I quote, all I will say is the country is taller than any institution. Dealing with non-accountable institutions is a major challenge today. Can non-accountability be a ground for investigative adventurism? At the center states it's only the elected who are accountable, end of quote. All right, we'll take a short break on that note, but when we come back, it'll be time for the pre-opening rates and we'll continue our chat with Prakash Diwan on all the stocks that you should look at.